Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 12th of January 2021. Alright everyone, let's get into the news from the day. Another day that ETH is not at all-time high, and I'm still banned from posting on Twitter. Well, I guess a self-imposed ban, but I am really loving all the memes. That's for sure. It's what's kind of like keeping this very entertaining for me. So as you can see on my screen here, there's a meme put out by Scoopy Trooples here, which was quite funny. There's a bunch of other ones that I've seen around, and I wake up in the morning, I check my phone, there's a bunch of new ones. So yeah, I mean, keep them coming. It definitely makes it fun for me just to observe. Obviously, I can't reply to anything, but I can like and retweet. That's kind of a loophole that I have right now. But yeah, I think I don't know how long this is going to go on for, and maybe eventually people will just tell me, you can come back, it's okay. But I will stick to it. I will stick by my word, because I do think that if I don't, I'll never hear the end of it. That's for sure. People will keep coming back at me about it. So yeah, keep the memes coming. And yeah, if you want to chat, you can just DM me on Twitter or like Discord or whatever. I'm there as well. But yeah, I guess it's been kind of nice to take a little bit of a break from Twitter as well. As I guess we're getting into this bull market now. Good to have a break before we like really get into it, and like just gets really noisy from there. So yeah, definitely not the worst thing that could happen. That's for sure. All right, so Synthetix. So there's actually two updates from Synthetix today. I have this one here from Kane. I'll go through this one first. So basically, just a few hours ago, Kane published this blog post called Synthetix 2021, which is basically, I guess, a roadmap and a overview of what Synthetix is going to be doing in 2021. And they've got a big year ahead of them, definitely. So basically, he runs through it in this tweet thread, which I'll actually go over. You can read the full blog post, but it's quite long, so I'll link that for you guys in the YouTube description to kind of have a read through. But basically what they're doing is they're going to be focused a lot on scaling, right? So I've spoken about this a few times now on the Refuel, about how they're going to be scaling using optimistic Ethereum from the Optimism team. So they've been, big proponents of that. They've been doing testnets with that the last few months, so that's definitely coming. They're going to be releasing Synthetix V3, which is basically a complete rewrite of their entire contract suite that is not backwards compatible. So basically it's going to be, everyone needs to upgrade to this V3 because there's so much tech debt in V1 and V2 that I think the Synthetix team would rather just go with V3 and not have to maintain the old kind of versions, which makes sense. Another area of focus in 2021 is going to be governance improvements, especially around their Spartan Council, which for those who don't know is basically, I guess you could call it a bunch of multi-sig holders essentially acting as like governance delegates for the Synthetix protocol. So I think they're going to kind of expand that out and kind of improve upon that model. It seems to be working for them. They got synthetic futures coming. They have more assets coming to the network. Basically, I guess include more crypto assets, commodities, and foreign exchange. But most importantly, he believes the Spartan Council is likely to request Chainlink provide equities feeds as soon as they take control of the Synthetix improvement proposal process. That's going to be cool, right? Synthetic equities, that's something I would use for sure. I hate using the old clunky traditional financial system to get exposure to different stocks and things like that. So I would love to use Synthetix for that, definitely. There's a bunch of other stuff here, like binary options. He lists here basically there's going to be for stakers there's going to be continuous staking rewards instead of a weekly snapshot. There's going to be continuous vesting instead of a year-long vesting thing. And there's a bunch of different things here like silo debt pool. There's so much coming to Synthetix, and I mean, full disclosure here, I'm an SNX holder. I have been for quite a while, and there's a big reason for that. They're just one of the best projects in Ethereum right now and within DeFi. They just keep executing on the products that they're building. They have a lot in the pipeline. They're trying to do like a few different things at once. They're trying to push the envelope forward, especially with scaling, right? And I think Kane especially is definitely, I guess, all in on Ethereum. I don't like to call people Ethereum maximalists, but Kane is definitely all in on Ethereum, and he understands that we can make this work, right? We can scale via layer 2. We can get to, I guess, like the decentralized world that we want to get to. So I really respect Kane and the way he's structured Synthetix and the team and everything like that. So that's why I'm a very loyal SNX holder, and I love watching this project evolve. So Yeah, go read the full post if you want to get more context around everything they're doing. As Kane says, it's a 2,500 word post, so definitely not a short read, but something that I think, if you're an SNX holder or if you're interested in the Synthetix project, it's worth your time to read it. And on the note with Synthetix, they've also got a new liquidity mining incentive for on Curve. So you can there's basically 8,000 SNX per week up for grabs to provide or synthetic euros liquidity to Curve Finance's Euro liquidity pool, which is pooled with EURS, which is from Stasis. I think Stasis is another stablecoin issuer, obviously there. And I thought this was interesting because one of my predictions for 2021 was that non-USD stablecoins would gain a lot of traction. And I mean, I made that prediction kind of because I saw this stuff happening. So there was already an EUR pool on Curve. It wasn't incentivized, but it was there. And I figured, okay, this makes sense. Personally, I would love to have a very liquid AUD stablecoin. It's incredibly annoying for me to have to sit in USD and then have to take into account the price movement between USD and AUD for tax reasons. It's just really, really annoying. So I would love to see a liquid AUD market on DeFi where I could just cash into AUD instead of having to go into USD and then, have all that tax headache. So, and I'm sure I'm not alone here. Obviously people living in Europe would probably prefer to go into euros rather than USD for the same reasons. There's a bunch of other currencies like the Singapore dollar, basically, where else? I guess like you have Singapore dollar, you have New Zealand. New Zealand's pretty active in crypto. The Australian dollar. I mean, there's so many, right? There's so many different fiat currencies. I do think the biggest ones are going to be, first, like Euro is obviously one of the biggest ones. Surprisingly, for Australia, we're a small country, 25 million people, but the AUD is one of the most traded currencies on foreign exchange kind of exchanges, and along with the Japanese yen too. So I do think we're going to see those top ones come to market first. That's just a consequence of them being basically the most popular on the forex markets already, and the most popular to trade as well. So yeah, I'm looking forward to more of that coming, but great to see Synthetix incentivizing this pool to bootstrap that liquidity, because we definitely need that going forward for sure. So Dark Forest announced on Twitter just a few hours ago, I think, that they had passed 1 million transactions on the XDAI sidechain in only 2 weeks. So this is for their V 0.5 that they brought out a couple of weeks ago that I remember mentioning on the Refuel. But for those who don't know, Dark Forest is basically a decentralized strategy game built on Ethereum using ZK Snarks. But due to obviously Ethereum scalability limitations, they're using the XDAI sidechain, and they've done 1 million transactions on there, which I thought was really, really cool. That's probably more transactions than any of the quote-unquote ghost chains or other layer 1 blockchains do, so which is quite funny as well. So this plugs directly into Ethereum and bridges across to Ethereum, the XDAI chain. But yeah, congrats to Dark Forest on this. And I've actually seen a bunch of people on Twitter you're getting really addicted to this game. Basically, the objective is to capture planets, grow your army of, I guess, like planets and your kind of like fleet, I guess, and then take over other planets and take over other players. And some people are getting really into this, like really, really into this. But yeah, I think that in general, we're going to see more of these blockchain games kind of get more and more popular, go onto these side chains, and basically, take advantage of this scalability that they offer. Because yeah, you can't do this on Ethereum's main chain, and you never will be able to. It's not going to work. This is why we need layer 2 and side chains. And I think a couple of days ago I explained the difference between the two, where layer 2 is normally secured by Ethereum, the Ethereum mainnet, whereas side chains are secured by their own validator set, and they basically bridge into Ethereum. Yeah, so I expect to see more of these kind of games come to Ethereum, and use side chains and things like that for those kind of, I guess, low value use cases. I'm not totally sure on this, but I think maybe Dark Forest saves your progress to the Ethereum main chain. If it doesn't already do that, maybe it will in the future, because that's a good way to basically make sure that even if for some reason the data on XDAI is corrupted or like the network goes down, you could still access your account and port it over to a new side chain or something like that. So yeah, we might see that happening as well, but I'll keep an eye on that and keep you guys updated on everything. So Matt Solomon today on Twitter basically released this tool he's calling Supersaurus, and what this tool does is it makes it easy to sweep all your ETH and ERC20 tokens to a brand new address. Now, the reason why you would do this is, as I think I've explained before, but basically, if you want to remove all of the token approvals that you've done over, the course, I guess, of like months or years on a certain address, it's actually usually cheaper just to move all your ETH and ERC20 tokens to a new address rather than removing them all because the gas fees are so high, removing all those approvals. So that's what this would be good for. It's definitely not good for like privacy or anything like that, because obviously, you send your ETH and ERC20 tokens to a new address, it's linked to your old address. So don't think of this as a privacy solution, but definitely think of it as a cost saver and something to clean up basically, from your old address. Maybe there's a bunch of coins in an old address that you have that are really annoying you, that are like airdrops and you can't get rid of them, and you just want to start fresh, right? And you can do this with this tool, which I think was really cool. So yeah, shout out to Matt there for building this. I haven't used it myself yet, but I do plan to because I have like a couple of addresses that I have tokens on and I want to remove some approvals on, but I just don't want to spend all that gas to do that. So I'm going to try this out and see how it goes. So Loopring put out this tweet basically of their block sizes on their Loopring ZK rollup. Now I explain here, and I'll quote, "Not every chart that drops off a cliff is a bad thing. Our ZK rollup is pumping out larger blocks today, a sign of greater continuous demand. More transactions compressed into each for more efficiency. When Ethereum L2 season really hits, we're going all dark green." So for those who are watching the video, you can see the chart here. The block sizes, I think maybe they're measured in kilobytes, maybe. I'm not sure if they're measured in kilobytes or megabytes here. I don't think it actually indicates that. But basically you can see that I guess during December they had smaller blocks, so they had the blues there, 16 and 64, and then a little bit of green, and now it's the majority green, right? And this is because Loopring has been growing, or their ZK rollup exchange has been growing so fast lately. I mean, as I mentioned a couple of days ago, they've got like, I think almost 100 million total value locked at this point, or more than that. And this is because they're actually innovating here and doing liquidity mining to get people to move to layer 2. And they're the front runner, or one of the front runners, because they have a working layer 2 exchange that is relatively liquid. So it's really great to see it getting more usage and a lot of people making more use of the blocks that are there. Because I remember seeing, I think, Matt Feinstein from Loopring saying, "Come use our exchange. The blocks are basically empty. Come fill these blocks up with your transactions. We've got liquidity for you." And people are finally doing that. And I always beat this drum like so much, is that the reason people are finally doing this is because they're sick of the high gas fees, and they want the easiest and smoothest kind of process to move to somewhere cheaper. Now, you could of course move to another chain, right? But there's no liquidity there. There's no ecosystem there. When you move into Loopring and to a ZK rollup, you still retain all the network effects from Ethereum. And you can bridge back very easily. You still use your MetaMask, you still have like a similar transaction flow and things like that. And you still have the security guarantees of the Ethereum mainnet. So yeah, I think that's why we're seeing this kind of explosion in growth for Loopring. And I think that, I've said it so many times, when Uniswap layer 2 hits, we're going to see growth there. Synthetix is going live in 3 days. I think January 15th, there's a soft mainnet or a launch of Optimism with Synthetix. That's going to be big. I'm really looking forward to seeing what they have in store there. And I think after that, we're just going to see, Uniswap roll out, Chainlink, maybe some other things like Aave, as I spoke about yesterday. I think they are moving to Optimism too. And then as time goes on, we have, I guess, like a lot of solutions around cross L2 composability, like, L2s talking to each other and things like that. So yeah, it's L2 season for sure. They say here when Ethereum L2 season really hits, I believe we're in like the early innings of it. And we're going to go into like a really kind of like golden age of L2. And, it might get to a point where so many people are using L2 that the main network fees come down a lot because of it. And then people move back to the mainnet and we have like this load balancing effect where, when the mainnet's relatively cheap, maybe there's more liquidity there, you do some stuff there. But then when it's expensive again, you have your L2 solution as well. So there might be a bit of fragmentation there for a little while until it balances itself out. But I do think that it's going to be great for end users, of course. And we're going to have people kind of thinking, wow, like we didn't know this was possible on Ethereum. Because I see a lot of people that obviously don't pay attention to the Ethereum ecosystem as closely as I do, and a lot of you watching this do, that kind of think that this is it, right? This is the way Ethereum's going to be forever, and that's not true at all. Ethereum is not just sitting here on its hands waiting for scaling to happen. This is not Bitcoin with Lightning Network. I know there's development going on there, but at this point, the Lightning Network has failed to gain traction, whereas Ethereum Layer 2s are getting so much traction. And that's simply because it's easier to build a Layer 2 on Ethereum than it is on Bitcoin, to be fair. But we're going to see this happen, and I think people are underestimating how quickly it's going to happen. So really looking forward to that. And you're probably going to hear me talk about Layer 2, all the time going forward, because it's incredibly important, and it's an incredibly exciting space going forward, I think. So last thing to talk about today was a new stablecoin project that was announced called Fei Protocol. So basically, I guess where this falls into the world of stablecoins in terms of like categorizing it, it's sort of like an algorithmic stablecoin, but not the ones that you were used to. So I've wrote about this in the Daily Gwei newsletter today, a little bit more about it if you want to go check that out. But basically what Fei Protocol is trying to do is it's trying to create, I guess, like an under-collateralized stablecoin that's safe and fully decentralized. So if you look at here and look through the blog post here, you can read it for kind of like the full detail here. But basically they want to have a system where it only uses decentralized collateral. So ETH, right? For example, tokens on Ethereum that are really liquid, that don't have any admin keys or backdoors, like Link, for example. They don't want to use wrapped Bitcoin or USDC or things like that because they want to remain as decentralized as possible. Now, obviously, we had DAI previously that was, obviously the first decentralized stablecoin. But at this point, because of the fact that it's backed by so much USDC, has WBTC in there, even has Tether, I think, in there, it's not fully decentralized anymore. So, in comes Fei Protocol, but that's not the only thing that they're innovating on. As I said, they're an algorithmic stablecoin. So they're basically trying to, contract and increase the supply based on a bunch of different market mechanisms. It's detailed here. I'm not going to try and TLDR it on the refuel because it does require you to read through this because it's a relatively new mechanism here. And it's also trying to be governance minimized. So there is a governance token, but it's supposed to be governance minimized so that there's not like the governance doesn't need to do much to maintain this sort of thing. It doesn't, and most of the time the kind of like coded in algorithms and logic should take care of the stability of Fei, the stablecoin, on its own. It shouldn't require human intervention. So very, 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 I guess you could call it ambitious project here, I think. And I think that it's sorely needed because we already have very popular centralized stablecoins and they're easy to do, right? You issue a token on Ethereum that's backed by US dollars in a bank account. Done. MakerDAO is kind of an amazing attempt at this. It has issues now with decentralization, right? Because of the centralized assets in there. It sometimes has issues with its peg, but I wouldn't count the peg issues as like a make or break. I'd say the fact that 40% of DAI is backed by USDC is more of a make or break for me than I guess the fact that it's not stable all the time. But that's a different model as well. It's collateralized with people that want to basically draw DAI against it to do whatever. Do whatever they want, whether that's going leverage long or using it as a stable coin in its own right. Whereas Fei Protocol is trying to do something different here. So still very early stage here. Was just announced. I think their Twitter account's only been out for a few weeks. So definitely go check out the full blog post and give it a read if you want to learn more about it. I think this is sorely needed because we can't have a DeFi ecosystem or a decentralized finance ecosystem that runs on centralized assets, right? We can't just have the entire kind of thing running on Tether and USDC because then they're choke points, they're central points of failure because stablecoins are some of the most used assets on Ethereum, if not the most used assets on Ethereum and within DeFi. So if the kind of US government could just go to Coinbase and say, hey, we want you to freeze all of the USDC in MakerDAO, right? Well, there goes 40% of the collateral that's backing DAI, instantly. So that's just, that's not great. That could lead to some very, very bad on-flow effects for DeFi, considering that DAI should logically, after that gets frozen, should trade at 60 cents, which means that people are going to get liquidated, right? The kind of like AMMs will all go out of whack. Arbitrage bots are going to make a ton of money probably if they're set up to take advantage of this. A lot of funky stuff would happen. So I definitely think that we need something like Fei Protocol. Don't know if it's going to work or not. Maybe it doesn't work at scale, but interesting to see. I'm very interested to see if it does, and I'm interested to see more experimentation here with actual kind of algorithmic stablecoins that don't look like Ponzi's. Now, I'm going to get in trouble for this, but the ones that we currently have definitely look like Ponzi's, right? Maybe they're not. Maybe they're not meant to be, and maybe they're not meant to be scams at all. And I'm not calling them scams or fraudulent, but a lot of them rely on new capital coming in to maintain their stability. And basically, the game kind of only works if the coin is below or above $1 to encourage people to put more money in the system. If it stays at $1 forever, then it can't grow because no one is incentivized to put more money in the system. At least that's the current crop of them. So I'm sure there's going to be projects that keep experimenting, and I welcome this experimentation. But until they're actually stable, I think calling them stable coins is a bit misleading. I guess you could call them pre-stable coins, or attempting to be stable coins. But the current iteration of many of the algorithmic stable coins are not stable at all. And they probably never will be in their current designs. I don't know if Fei protocols or Fei, the token itself, is going to be stable in the long run. We have to just test these things out and experiment. So yeah, looking forward to Fei protocol going live. I think they're aiming for an end of Q1 launch, so pretty soon, basically March. So we'll definitely see how that goes over the next couple of months. All right, that's it for today's refuel, everyone. Thank you for listening and watching. If you haven't subscribed yet, definitely do so on the YouTube channel. Give the video a thumbs up, join the Discord channel, and subscribe to the Daily Gwei newsletter. And I will catch you all tomorrow. Thanks, everyone.